All right. Well, we should be live. We're live with the Mortgage Podcast, which is founded, actually an idea by Bob Nemi from Wiener Brodsky, the co-host of the show. Bob, good to see you again, man.
Good to see you, Rick. And by the way, it's Wiener Brodsky Kiter. I never want to drop Mitch from the firm name that he founded. So
he gets too much credit anyway. So no, I'm just kidding. I loved meeting with him when I was at the IMB conference in Florida. We were able to spend a good 45 minutes just talking about the industry and as the industry has evolved. Just an incredible figure. And Matt Van Fossen, founder of Absolute Home Loans and also the Big Point of Sale.
I mean, if we're in the mood of correcting, it's Absolute Home Mortgage, but who cares?
You know what's funny? The Absolute, that name obviously has popped up over the years, in the business across the country. It's kind of how did you end up with Absolute Home Mortgage? Like, where was that? Or were you just one of the many?
I actually didn't. I wasn't the founder of the company. I bought the company in 2010. The company was an offshoot of a Century 201 real estate brokerage initially. And when I asked the original CEO how they came up with the name, he literally said it was the phone book rule. We came up at first in the phone book. And what's funny? The funniest part about that alphabetical strategy, we still get calls from the HUD list and the USDA list. Every single day we have more inbounds than anybody just because we come up first.
No, that's incredible. I didn't realize that you had bought it in 2010. I mean, what an incredible time of restructuring, to have bought it. Was it how long did it exist prior to 2010?
So it was open in 1998 and we were brokers. I was running a really big net branch broker system, before the regulatory wave came in. And when MLO comp came into effect, we kind of realized, we had a couple hundred loan officers and we needed to make that migration. And that's where we started looking to do a merger with an IMB.
No, that's incredible. Look, the industry is changing so fast. And I know the subject of the of this episode was really around AI. And in fact, I got a phone call from a vendor this morning around any pending litigation. He was like, is there any pending litigation regarding outbound voice AI? And I just said, well, it's kind of interesting that you ask, because we're having a show about this today regarding just the state of AI in the mortgage industry today, both just AI from an operations standpoint and AI from an outbound voice, because it's certainly created the attention of a lot of people.
Well, I think, Rick, it's actually a great opening topic because, for the past 15 years, we've been trained, as long as our attorneys are great attorneys in the industry, to be looking at what regulators are doing, right? Rule by enforcement and stuff like that. And my new largest fear, especially with a dormant CFPB, is class action lawsuits. That's what keeps me up at night, because you just need savvy attorneys to go and say, not is there AI pending legislation out there? No, there's this entire framework of current laws, rules, and regs that we currently operate by. And what is a company's usage of AI doing? And, you saw this past year in 2025, the Optimal Blue lawsuit is now looking like, okay, you can get sued. You as a vendor and your clients can get rolled in as a batch with a technology feature and go get a class action lawsuit against all of you if that feature that you're doing violates some type of law. So I'm not aware of any direct AI current pending litigation, but we're seeing this uptick in class action lawsuits. And I assume that as the features start rolling out, it'll come. As far as the AI dialer, I have TCPA at the top of my mind with that. Are these AI dialers going, because there's tons of TCPA class action lawsuits out there. So if they tie it in, they figure out a company is going and doing an AI dialer, they go figure out their client list and that there might be a vein of violations there, because we know these AI dialers can make 10,000 phone calls in 10 minutes, right? That seems to be very low hanging fruit that, I'm sure these law firms will pick up on.
Bob, how is this any different? Because I always understood the landscape to be that, ignorance of what the vendor covers and doesn't cover really doesn't indemnify the owner of the mortgage company any more or less than what Matt's talking about. So why is it different now with AI versus what the obligations are on the lender with respect to the vendor? Okay.
And it's not. I mean, you can delegate the effort, you can delegate the work, but you don't delegate the responsibility for the practice. Whenever you have a vendor, no matter what it is, you have to vet them, make sure they're operating compliantly per your standards, per your policies, and that you're monitoring that so that they don't go off the rails at time or do something they believe that is fine and perfectly okay and matches the law, and then you find out, well, no, that changed, or in this state, as a state licensed entity, it might be, in Colorado, it's different than it is in California than it is in New York, and you've got to understand who you're calling and where they're at. So,
And Bob,
it doesn't change.
Bob, to add to that, I think that looking at Michigan is very interesting because Michigan is one of the first states not to put out regulation or law, but to put out a regulatory bulletin on it. And one of the provisions in the Michigan bulletin that was sent last month says that the lender is responsible to make sure that their vendor is meeting applicable state and federal laws. Now, most of our vendor contracts, Rick, they have provisions in it that say, like at Big Point Sale, we have a provision that says our code and our software is in accordance with state and federal law, right? And there's an indemnification. But think about this waterfall. The regulator is going to regulate and fine the lender. It is then the lender's responsibility to go and leverage whatever contract they have with their vendor. It's not a straight pass through. You don't refer the regulator over to your vendor, right? The lender is going to bear the burden of the fines and everything else and the responsibility of defending themselves in court. And then they would have to try to go after their vendor, and good luck with that.
So what would you say to be, because Michigan put out their bulletin, didn't California and a couple of other states as well? Like who else has spoken out on this from a state regulatory standpoint?
Well, one, you're talking to the right guys because I'm chairing the state regulatory legislative committee, and Bob is my co-chair. So this is what we're doing as a team.
It's called a softball pitch.
California has pending legislation. The bill is getting taken back up inside of this legislative session, to my understanding. And Bob, I can look up the database, but it's HR 2 something. I forget the exact law.
And there are multiple states talking about it. Matthew and I were both just at the NMLS conference last week in Orlando, and the state regulators are asking about it. And I'm on the Industry Advisory Council for ARMOR, the American Association of Residential Mortgage Regulators. So the trade association just for the state mortgage regulators. They have a pending AI survey. They brought one to us that was literally very poorly done. And it's being reworked by MBA so we can get it out and send it out anonymously and not have it come back. But they're trying to understand how are lenders using this, and they want to understand how do they look at and examine so that they understand, they can realize what you're doing with it and that you're taking it responsibly and effectively moving it forward with consumer protections in place. Because we've got new technology, but the laws and the rules, fair lending hasn't changed. All the things TCPA that Matt mentioned a minute ago, all of those things have not changed. And as the licensed entity, your responsibility is still yours.
So, like, just from the standpoint, well, go ahead, Matt.
I find it interesting because Bob had invited me and Pete Mills down to North Carolina to give a presentation on the state of the mortgage industry to the North Carolina regulator at their summit. And from sitting in those sessions, then presenting, the first thing I noticed was interesting is they're figuring out they can use AI to regulate us, right? Yeah. That how they can do it to speed up their examination processes. But then we gave a presentation of the opposing of saying, well, this is how mortgage companies are looking at it. This is what you should be aware of. And their entire, almost half of the morning was dedicated to this topic. So these regulators are having internal discussions and external discussions to get up to speed fast on how this stuff is being applied.
That's interesting because it seemed to me that just and Matt, you wear obviously a lender hat as well, but it seems to me that that what the regulators have done is basically just emphasize that, like, whatever AI is and wherever, and again, a lot of the comments have been in 2024, 2025, when AI was still evolving as it is today, but it was still sort of a new introduction to the conversation. And it struck me that a lot of the conversations where we're, hey, whatever AI is, it's not going to be an exemption to fair lending, kind of to Bob's point. It's not going to be an
Right.
exemption to FTC regulations. It's not going to be exempting to LO comp or fair or any of the SAFE Act related requirements around licensable activities. If there's a decision to be made or a conversation around credit or allocation of credit has to be done by a licensed individual as opposed to some autonomous AI bot. But to me, that doesn't really seem, it seems like TCPA is still in place. The do not call registry is still in place. Like, it doesn't seem like, it's kind of like there's nothing really new here. It's just a faster way of doing what dialers have done for 25 years.
Well, I think that we can defer back to a general MBA position that we don't need new laws around AI. We just need to have understanding that there's laws in place that it needs your AI usage needs to have guardrail management and proper governance from a lender perspective to see how it's fitting into the pre-existing infrastructure that's there.
And understand that there are a lot of new AI, entrants into the market coming forward with their versions. And they are not all lenders. They don't understand the rules. They don't understand the laws, what they can and can't do and when they can do it. So
yeah.
I think
that's some of the challenge.
Bob, you bring up a great point there,
Yeah.
and Rick, to tie back to what you're saying about the evolution of AI capability. When this revolution started 3-4 years ago, the language management systems were like, oh, cool, I can go and have it write a really nice email or go have it write an article for me. It was a lot of marketing and a lot of, just like having it be a proofreader. The acceleration that I've seen in the past 12 to 18 months, which is getting unruly, is like Anthropic coding features. And this is where it gets very, very scary. The concept of vibe coding that's now out there, that you can go in with a $300 a month Claude account and you can vibe code what looks to be a production ready idea to product. And the problem is there is zero controls around this code. You don't know data security. You don't know what you're hooking it into. You don't know actually what this thing is disseminating, and more than anything, you don't know the inherent bias that's programmed in. So what's scary about what Bob is talking about is you have tons of new startups that are vibe coding via prompts because they heard there's a need in the market. There's no other than proof of concept, there's really no testing that has bolted this thing into live mortgage companies. They haven't worked with mortgage companies. They don't know the past 15 years of regulation to go put the proper guardrails in place. So it's something that lenders should be in their vendor vetting processes extremely, extremely careful about. Like, your AI vetting policy for vendors should be separate than your standard vending management. I want to know the customers that it's live, the amount of transactions that have gone through it, the security guardrails. Where is the data going? Is it going into the ether, right? Because you can't take a document scraper. You can't just go to a company, go get a document scraper and say, yeah, we're going to go load pay stubs and W-2s into this thing and have it calculate income. It's very easy to build one of those. The security provisions around it, it's particularly in certain states, is very scary to see if you're meeting.
It strikes me as somewhat reminiscent of what the evolution of the LOS, like when a lot of the regulatory sort of when the regulatory environment began to sort of take shape in 2009 and 10 and 11, and like everything was sort of this 3 or 4 year evolving landscape as the CFPB got implemented and Dodd-Frank got sort of debated and then rolled out in the industry. I mean, it was like a 2009 to 2013 kind of evolving flex, right? Yeah. And I remember being at Calyx and we didn't have a single lawyer on staff at the time. So, and part of what the philosophy was at the time was we don't want the liability. Like the regulatory, onus of that is, falls on the shoulders of the lender. And Ellie Mae took the exact opposite stance. And they worked closely with Mitch, especially when it came to making sure that disclosures and fee calculations and everything in sort of the management oversight of the platform there was legal involvement in advisement so that you are de facto kind of getting a compliance engine along with a loan origination engine software. So it strikes me we're kind of going through a similar kind of evolution, because at the last conference that we were just at, Matt, I think it was what was it? I think it may have been the IMB conference in Amelia Island. There were so many of these startups. I've never seen more mid-20s, late 20 somethings from Google, Harvard, Yale, from Stanford rolling out. And my first response is like, in fact, I just referred someone to Mitch a couple of days ago saying, like, you really need to ensure that you at least have some compliance and regulatory and legal connection to the industry to kind of review what you're doing and to provide any sort of feedback on it. Because you're going to get asked by lenders because we don't know what to ask, but we know to ask enough to say
they're making outlandish claims. We will reduce your operational time frame in processing a loan by 90%. Well, on what basis? Right. And you introduced me to one of the startups and you said, hey, will you meet with him, evaluate? I said, sure, but just know the guy's going to go through the ringer. Right.
Yeah.
I'm going to look for 900 reasons why you messed up and what you didn't cover, because, guys like myself and Bob and you, Rick, we know from studying this stuff from 15 years of watching case law and fines and everything that everybody did wrong. And that's the thing in this industry. There is a regulatory gotcha hook everywhere you turn, right? Take it down the information security, take it down federal regulation, take it down state points and fees. Whichever lane you go down, there are these hooks and gotchas that you're violating some type of provision.
Bob, what would you say to a lender, though, like, separate from like myself or Matt for that matter? Because most lenders are completely ill-equipped to even have this conversation in any meaningful way, but they know they need it.
Number one, I would say Matt's conversation and what he just said needs to 100% happen each and every time, because how does you as a lender turn around when you're asked by state of Georgia, by Massachusetts, they said, validate for us what processes you went through. How did you confirm they are doing it? How do you know that they are still doing it effectively and compliantly? Because guess what? Matt knows a ton more. You both know a ton more about me than this. I know the legislative side of it and where it's going. The operational wise, I don't. You know who knows less? State mortgage examiners, their bosses. They don't understand. Half the time they'll tell you they can't spell AI. But that's the challenge when you turn around, no matter what it is, you have to be able to take whatever the regulation, the rule is, your process, and turn it back around at examination time when there's a question, because you get 2 complaints. Boom, they're in your shop. You got a targeted exam. We want to look at your whole process. Let's go through it all. What did you do? What did you do? And if the answer is, well, they said they could do this and they said they could do that and it looked good and it saved me money, that's not good enough.
Nope.
You got to wonder, Matt, do you think that this is one of those things where those lenders who are more judicious about their AI selection, their evaluation, the rollout, are the ones that are going to get punished in the marketplace because there's always going to be those lenders that are going to be first to market that are going to really drive or push the needle as far as they can. And the problem is they get away with it.
Yeah. They get
time and time again.
Some time, right? But everybody's time does come. And don't forget, we're already at midterms, right? So this is a political conversation as well, that if you see an administration change in 2 years, which is possible, you could see a full pendulum swing underneath the statute of limitations, and they're going to come back with wrath, right? They're going to come back and they're going to say, oh, let's go see what everybody was getting away with and skirting. So, you can't forecast, or you can forecast, but you can't predict the future of what's going to happen with the regulatory climate. But I think we're in another era of rule by enforcement. It's just a privatized rule by enforcement that we're going to see the litigation that occurs. And I think that this is much more on the states than it is on the federal government right now. And that's what we're going to be looking at. And the states are out there and they're looking. And, there's certain states that, look, we have a lot of 50 state IMBs, and there's also a lot of 49 state IMBs. The states you have to look at is Oregon, is Washington, is going to be New York, of course, California, Massachusetts, Texas. These are the ones that are going to define, because I'll put my lender hat on for a second. If me operating in 40 states and I'm in every state I just mentioned, if one of my AI features does not vibe in one of those states, then I can't release it company wide because I'm not going to go and segment my tech stack and say, okay, LOs in this state, you're allowed to use this agentic AI application taker, but if you're operating in New York, you can't. I'm going to be looking for solutions that are universal. And I'll tell you right now that if I sat with Miss Ricketts at New York Department of Financial Services and I showed her an agentic mortgage online application that a customer can go have a conversation with a AI agent and apply for a mortgage, I'm pretty confident she would be like, no way, not in my state. Right. And that's what we're going to face is there is a 2 to 3 year, maybe even 5 year regulatory delay that it takes for the regulators to understand what new technology is, understand what it's actually doing. And a lot of times it's the examiner. It's not even the administration at the state. The
Yeah.
examiner throws over a stone, finds something. They're in an examination, they're on a website, they go start applying and they start saying, well, oh, what's your name? What's your social? What mortgage type am I qualified for? And that thing responds and they're like, it can't do that. And when the examiner, Bob, correct me if I'm wrong on this, when the examiner makes a finable offense referral, a violation referral up in an examination, it's very unlikely that the administration overrules that and is like, no, we're not going to fine them for something. The examiner's job is to uncover stuff and then refer it up and say, hey, we think this is a violation. What do you assess the fines? And that's this examination kind of protocol that they have. And it's going to take a couple of years for that to shake up.
Well, I will tell you at the exam portion, there are many things that examiners will refer what they believe to be offenses, violations, or whatever of their code or a federal statute, and it will work its way into the working report of examination. Everything an examiner asks about or believes to be wrong doesn't always make it to the report of examination. Violations that are not easily correctable or have true consumer harm, those immediately get referred up. In New Jersey, they've got a separate division. Massachusetts, it depends on which direction it goes within the state for the process. But yes, they will go after, and they want to see that their consumers are not being harmed, and they will make it a public offense. And you'll see that you got fined for it. You're right about the challenge. And again, Matt's right. It's the examiner who doesn't know, and it does look like they're doing too much, too far, and that this is something that is licensable activity that should be conducted by an individual or should be, done in a more compliant manner.
Yeah.
And Rick, I think it comes down to governance and controls, right? We
Yep.
always talk about policies and procedures. Guess what, guys? It's not okay to have an AI policy and procedure. It's not one policy. It is a governance stack. It is a global governance policy and then a departmental AI usage policy in every department. How is underwriting using it? What vendors are being used? How are they assessed? How is loan officers using it? What do you allow them to use? What do you not allow them to use? How does marketing use it? How does every department needs their, so you need a global AI governance policy. Then you need departmental use cases and usage of approved and non-approved. And like we were talking about earlier, the biggest one is the vendor management. What questions are asked? How many vendors are using AI? Where does it fit in? And I think the most important question that every regulator is going to eventually ask is it consumer facing? Does a consumer interact with it? If they do or do they do not, then there's a different set of questions. Okay, no, the consumer doesn't interact. Oh, but the underwriter does. Is it making credit decisions? Then it's a different waterfall of questions. The consumer does interact. Okay, how and what are its responses? And the big key here is bias and what the responses are, right? And that's where you start going down those fair lending categories, right, Bob? Depending on its bias responses, how is it doing it, and also where are the off ramps? Where does a customer on a customer facing? Where does it get human in the loop? When can somebody get off of this thing and onto an actual human to make a determination?
And how you review those responses and challenges when it impacts consumers, and do you monitor, evolve your process or your system to make sure that it does not happen again.
I mean, it seems not all that different than phase one I mean, Ellie Mae was a website company interfacing between a lender and consumers, right? Back in the late 90s, early 2000s. POSs was the next evolution of the interface between the lender and the consumer, right? And one could argue that through simple workflow rules, credit decisions are being made by way of entering in what my what my credit score is, what my income is, and it because it's presenting options of this product, that product. This will be approximately the rate, but call for, or this might be your approximate monthly payment. It still doesn't seem to me, other than faster, bigger, better. It doesn't seem to me anything really different other than
Well, there's
scale.
some key differences. Rule-based versus generative. Rule-based is based on data inputs and defined rules. And if somebody wants to say, how did you get to this determination? You can go in through a rule stack and say, oh, it said 720 FICO, then issue this response. Generative is different, right? And that's where the concern is, conversational and generative AI, where these things are just going ham and based on its core programming. What data is it actually accessing to go make these determinations? And that's where you get into like these high risk categories. When you look at your AI risk assessment grids, you should be taking your generative consumer facing items and putting them in this top left risk category of super high risk and a lot more questions than rule based and back office facing. I think that's where the regulators, Bob, are going to learn. Once they learn, that's what they're going to be looking at. They're not going to be going and saying, "Oh, there's no point in them auditing your AI rule based decision making systems, right? Your AUS engines, those things already have guardrails. They're going to go for the low hanging fruit and go in and look at your AI dialers, your consumer chat bots, your consumer document upload or direct response systems. That's what I think they're going to want to look at, is because that's where the most risk is.
Yeah, they're definitely trying to understand better, and I know that MBA did coordinate AI training for state regulators. We do know that CSBS, the Conference of State Bank Supervisors that oversees the NMLS system, is doing more to educate their team, as well as they have a Catalyst initiative to try and bring technology, including AI, into the regulatory side to make them more effective, and look at better things through the loan process. But it's still a long way to go, because the person that you're going to talk to, get the email from, that's going to ask you for loan files, doesn't understand anywhere near the depth of me, and I'm probably the least knowledgeable of the three of us. Um, it's going to be a challenge until we make it better, and it's on the lender's side to take that responsibility and to show our regulators, to pull them along into where we are today, so that in 5 years, when we're using it a lot more, they're at least that up to speed, that much up to speed.
Matt, just taking this a step further, it seems, since AI is data set driven, right? And ultimately it learns based on past behaviors and decisions in clients that you've had in different use cases. And it seems to me that AI, for some lenders, or in some cases, could almost exploit, exaggerate, and highlight biases or issues of fair lending, because it's looking at maybe the last 20 years of data of how decisions have been made,
Right.
and then autonomously scaling those same patterns of decisioning within an organization against a new set of consumers over the next few years. Some lenders, in some ways, potentially could see themselves almost emphasizing these decisions, because ultimately it's not going to be divorced from the patterns within the organization, I'm assuming.
So I'll make a plug here.
Yeah.
MISMO,
Yeah.
the mortgage compliance data set, is referred to as the MCD. This is going to be the thing to look at, because what MISMO is doing is they are aligning lenders and their regulatory exams and regulators into a combined data set that does the exact assessment and testing that you're talking about, Rick. Us uploading data with the standardized mortgage compliance data set and it going into these tools that the vendors are building off the data set. So you have three wings. You have vendors, lenders, and regulators. And what Mismo is attempting to do with this MCD right now is create a universal data set that does that assessment and testing without bias for you, just on raw data. So it can go and if you're in an exam and you have to go upload 1,000 files, the 1,000 files go into a universal data set in a universal format, and it doesn't have a bias. It's just saying, yeah, that thing with no bias did not pass total points and fees. That was a SAFE Act violation. So the industry is already looking and collaborating behind the scenes through Mismo, and Bob's been very active on this with this MCD data set to solve that problem before it gets out of hand.
Well, so I've been active with the regulators. I think our last guest, Brian View, has been much more active with it. So
yes.
So is it fair to say that Mismo might have found? I mean, there's always a relevant case for Mismo from the beginning since the Harry Gartner days, but it's like it seems to me because of AI, Mismo and its sort of regulatory data set might very well have found its vital interest or its vital position in the industry to ensure some kind of uniformity within, because AI to some degree has been, especially if it's some kind of proprietary LLM. I mean, you're dealing with your absolutes data set and NFM's data set, but there isn't necessarily something without a Wismo connector, if you will. There isn't necessarily something that's going to have absolutes data set communicate with NFM's data set in a way that is going to be safe for both parties to say we're not sharing one another's consumer data.
Well, I think that's the essence of it. It's a standardization organization, right? It's about developing standards in a universal format. Now, whether we all adopt it is a different story. I think Mismo is behind more things than you'd ever realize. It's behind our appraisal data sets. It's behind our credit data sets. But it's up to these vendors to actually go and adopt that data set and say, yeah, there's actually standards behind it. So there's two Mismo initiatives. One is the MCD, and the other is what's in progress right now is the AI data set. So they are working on an AI standards and governance protocol right now to help lenders actually make these assessments. So there's an active working group developing it.
Yeah, and the adoption part for me is more concerned that all the states adopt it so that we can have it. Similarly, that we have the challenge of every state adopting the SES, the state examination system, which is what's behind it. I think this is the public viewing opportunity. This is really what Mismo is. This is why Mismo matters to an originator, to other people. Mismo's been out there for years, and I think they have 38 different standards that they're tracking today for different uses and different, but this is one that truly came from industry and from state regulators at the same time and said, you have to help us do this. We both need help. And I remember when I was ombudsman in 2012, we had challenges just trying to get for large scale exams to get companies to align with what's the stacking order that you're going to send us your form. So we don't have to flip through screen to try and find this document. We want it to be the fourth page, the fourth thing we look at. We've come so far, in 14, 15 years.
That's fascinating. What was you said there was two initiatives at Mismo. One was the MCD and then the second one was the AI data set. What's MCD stand for?
The mortgage compliance data set.
Oh, got it. Yeah, that's interesting. Okay. I'm just going to make a note of that.
Just look at any of Brian View's postings lately on LinkedIn. He talks about it quite a bit. And it is as important to where we go in the next 5 years, regulatory wise, to reduce costs, reduce burdens, and try standardize things. I think it is imminent that we all get understanding of this. We all support it, and it gets adopted by all the states.
Rick, I point to Jurassic Park in all of this. Jeff Goldblum had one of the best quotes of all time. Just because you can do something, did you ever stop and think you should?
Sure.
That should be a theme with AI vendors right now. we can do a lot, and you can do a lot of really cool stuff, but we have to think about what type of exposure do we have, and are we giving entities, right? Is it actually legal? Can you do it? How does it define? And I don't think that the vast majority of AI development companies right now in this industry are doing it like backwards. Like how I'm doing it is I'm first developing policy and procedure guidance, assessing those policy and procedures with state and federal regulatory code, and then going and developing the feature. I'm doing it completely backwards when we're developing this stuff.
Yeah.
Every single AI company out there right now is not doing that. One, they don't know. They don't know enough to do it, right? They're just saying, hey, what type of cool toy can we build, and what does it do, and how does it create efficiency? Then they're what they'll learn is once they come to market, once they get it into some of these big boy lenders that are smart enough and have the right vendor management controls to go in and say, well, did you think about this law? Did you think about that regulation? How does it tie into this? That's where they're going to start getting tripped up.
And from what I understand, and I forget the name of the vendor that spun off from, this will ring a bell to you, Matt, probably. There's a vendor that started at Freedom that spun off some technology that Freedom was leveraging during COVID to try to scale its underwriting decisioning in ways that it previously didn't. And it was so effective. Keith, I forget the fellow's name, but
I mean, I don't know about that vendor. That doesn't ring a bell, but I mean, I think when I think about that story, I think about Gateless and GR, right?
Yeah.
Gateless was born out of guaranteed rate, and that's where I'm looking. And I have a similar story of this with Absolute and Big Point of Sale, where I'm looking at it as this lender built tech sector that's come out. Some mortgage companies are scared of it because they're saying we don't want to go buy technology from another lender. But the way I look at it is the reason I went with Gateless was because it had GR's 500,000 transactions it ran through it for 5 years before it came to market. I don't want to be client number 6. I want to be client number 45 now. I don't have the time to go test everybody's technology. And we did the same thing with Big Point of Sale with Absolute was we beat it up at one company, brought it to 5, then brought it to 15, and then eventually got it to 50, right? That's the type of stuff that I'm looking at with lender built tech is you get to test bed it. You get to get the marketing experts, the compliance experts to put these guardrails around it. And I think that's just very valuable that us as lenders, we're starting to use this AI development functionality to build these enterprise systems that are actually bulletproof, that actually have these transactions under its belt, rather than coming up with an idea and saying, well, let's go install it in a client and give it to them for free for a year or two and see what they say.
Yeah, I could see that being if there was ever an advantage of, like in your case, owning a tech company and owning a mortgage company, if there was ever an advantage, it would be that right there is your ability to incubate it locally and then deploy it more on scale after having done X number of transactions. Keith Bilodeau was the longtime, he used to head up wholesale over at Freedom, but he spun off with a couple other folks. And I forget the name of the company, but they were one of the first entrants back in 2021, maybe 2022, where they started leveraging at least the marketing language around AI. It was kind of like pre-ChatGPT, so I don't know how much AI it really was, to be honest with you. But to your point, Matt, like a handful of I was talking to a couple of young guys. And they were like, Y Combinator. They were awarded maybe $500,000 or something. And they were at the economic summit at the Housing Wire conference. And I was just shocked because how little they knew about the business. But they were trying to get a product lift as if it was sort of a standard kind of technology you'd roll out to B2B or B2C. And it was pretty clear, that. And that's why my advice to them was like, look, get counsel, make sure that you're going down the right path and then make sure you're not necessarily overselling what it is that you think you're doing, because there's a lot of dynamics that I can guarantee you're not really aware of.
Well, Rick, with every startup out there, the first question when they approach me that I have is now I'm part of the Encompass user group, right?
Yeah.
Is are you approved by ICE Mortgage Technology? From having to go through what they call the ISV network, the Independent Software Vendor Network, that approval process, because remember, I'm on the lender and vendor side. I got to see both of it. They bring you through hell. It's a 12 to 14-month code approval and data security and API review process. So, and that's only one part of a review, but like I asked 2 questions: Are you SOC 2 approved, and are you an Encompass ISV? If they can't pass those first 2 tests, we can end the conversation with 80 to 90% of the startup vendors out there. Right?
Yeah.
If they pass those 2 tests, okay, now let's start getting into the nitty gritty of your data security, what that looks like. Right? Those are the assessments. So these startups, they have these roadblocks that they have to get through. Right? It's not cheap to go through an Encompass approval and become an approved ISV. It's an extremely expensive thing, and 500K is not going to do it. You can't go and have a 3-man dev company to go do this. So there are like controls. Like, you know what? I think it comes down to something very simple. We have to remind ourselves we are a banking industry, independent mortgage bankers. We're bankers. We have to have enterprise level banking, data security, and software infrastructure because we are facilitating a person's every aspect of their personal financial information. And whatever we tie into our core databases, whatever we tie into our LOS, whatever we let our loan officers use, we have to make sure that that consumer data is protected and it's secure. And every software we decide to bolt onto our core database has to we have to have that in mind when we're vetting them out.
Yeah. Yeah. I mean, data integrity has been a massive problem for a really long time in our industry. And I don't really know, to some degree. Now, I think it helped having Encompass, going to the cloud and having Encompass host it for you. I mean, I think that was, but it certainly wasn't mandatory. And so I think the way that lenders and the broker community is a whole separate conversation, but the way lenders have been systemically fairly careless when it comes to consumer data. And there really surprisingly hasn't been, given the weaknesses, there really hasn't been a lot of, fines or infractions around the subject, which also has been somewhat surprising. I'm looking back over maybe the last 10 years. I'm not saying there hasn't been, but it's not like there hasn't been something that I'm aware of that has shaken everybody.
No, I think there is. I think you're just looking in the wrong area. I think the data breaches. And Bob, correct me if I'm wrong. There's substantial amount of rule by enforcement that data breaches occurred. The breaches the lender did not notify the consumers based on the regulatory statute. The regulator found out about it, and they came down hot and heavy and issued some big fines. So it's more around security breaches, a lot around ransomware, a lot of penetration testing failures, and I think you can go look at several states that there's some predominant cases that some big fines were handed out for breaches.
I'm just looking at from the perspective of, I mean, there's a lot of lenders that still allow you to use personal laptops, and there's no restrictions on being able to download data, or they're not deactivating your USB. Your ability to plug in. I mean,
there's a lot more small lenders than big lenders, Rick. There's a lot more small lenders than big lenders.
Well, that's my point. That to me illustrates the magnitude of the problem. Is that of the 300 lenders that are doing the bulk of the business, there's 28,000 lenders out there that really aren't really as buttoned down as we'd like to imagine that they are.
How many loan officers' laptops are on Starbucks Wi-Fi right now?
Oh yeah,
with a W-2 and a pay stub sitting on their desktop.
Oh yeah.
How many, when you go to a conference and there's a lot of originators around, you see the laptops open, they get up and they go to talk to somebody. They leave it and it's standing there wide open. I do want to follow up on one point that Matt made a minute ago. So some of the data breaches and the penalty and the enforcement that's been out there, this is the ultimate definition of the patchwork of guidance, because that's state by state by state. Definitions of what is a breach, when it is known, known as a defined term when you identify that it's a known breach, and
Yeah.
what your time frame is: 72 hours, 5 days, different amount of times. Because once they find out it's happened and that you didn't notify them, and they read it in the headline, or they see a blurb on the news that something happened, that's where it comes down a lot harder, because you're not following and you have not prepared for the state by state by state regulatory oversight as well, and notifications, because it's quite a challenge.
No, it seems really confusing, and it seems it feels very confusing, and it also feels very intimidating. I think for most, and to me, it strikes that it's going to create just an even greater divide in the industry, because there are those lenders who are going to just push forward aggressively, really, because like to Matt and to your point, in 2 years. In 4 years, we could have a new, or 2 years, we could have a new administration. We're in election year 2026, 2028. There's a new presidential election. You can make a lot of money in the next 2 or 3 years.
Sure.
And so I think that and then there's always the sense that you can pivot as others get their hands slapped. You can sort of react to the clarity of what it is that they're getting their hand slapped for.
It's all about risk versus reward. How much risk
Yeah.
are you looking to take? You can make a lot of money violating MLO compensation protocols, right?
Yeah.
And regulations. You can make a lot of money doing that. But how much risk are you looking to take? And I think you see this all the time. How much risk are you willing to take with how you do real estate MSAs and how you do your business development? A lot of people taking a lot of risk. Greg just put up a post over the weekend about it, right? Of a top 5 doing it. There's a lot of
Oh, yeah.
money to be made in more risk that you take. But it really comes down to the executives. I'm not a risk prone person. I probably over compliance my entity to a fault, because in the end of the day, my reputation and my career and everything and my personal net worth and everything I built over the past 20 years is on the line here. So I don't have a big tolerance for risk.
And that risk doesn't end with the transaction, doesn't end with I closed this deal and we got by. That time frame and that retention, and when those rules can apply and when laws can impact you, go beyond the 2 year time frame, go beyond that. Some states are 5 years, some regs and laws continue much longer down the way, and you could be still getting enforcement and find out you made a lot of money today and it's going to cost you 10 times that at the end, if you are truly being brazen in violation and knowingly. It's in the reg for LO comp. You knowingly violate it. You have just now tripled your damages or worse.
And you know what? Time will tell, Rick. You asked me a question a couple of times already. I'm one of the biggest mortgage companies in the Northeast region, and I've survived for so long, right? You said, dude, you're young, you built this thing, you're still around. Go look at the Northeast region. Go look at how many IMBs have closed and consolidated in the
Oh,
past
yeah.
10 years. It is scary, this region. We were a massive mortgage hub, and they've disappeared. And that's what it comes down to is
Yeah.
you're going to, yes, you can compliance your way out of business, but you can also, by being uncompliant, have a lot faster track of going out of
Yeah,
business.
to go the other way.
Yeah.
Yeah. What about, so as a POS yourself, Matt, with the big point of sale, and let's say you partner with an outbound voice platform, what would protect you from that? Let's say outside of you actually natively building that technology. Let's say you partnered with that. Would it be an indemnification? Would it be some kind of hold harmless that you'd have in your contract with that particular vendor partner?
I'm not an attorney. I'm not an attorney, right?
Neither am I.
Yeah. So I can't really advise on that. I would say that off the top of my head, the best provision, one, I wouldn't build a feature like that. The risk isn't worth the reward. I would say I would build an integration, like a webhook that would allow that vendor to go through our client's approval, gain access. So all I would do to my client is say, look, we have an open API at the back. You want to go do something crazy like that? If we're housing the data, we would defer them and say, use the ICE API first, right? To go access the loans, because we use them as our data repository. If that's still not good enough, we'll throw you a webhook to go grab the data to send it to your own vendor. And you're signed to hold harmless with us, that us opening up that endpoint, the data security is on you, right? The controls are on you. I wouldn't be interested in that. I'm looking at AI development and AI feature sets a little bit different than the rest of the industry, because every time we are building an AI feature right now, we are looking at compliance and regulatory oversight, guardrail management, and how to put we're looking at restrictions more than how to open it up when we're building stuff right now.
It might be an interesting conversation. I know, Housing Wire has their AI conference in the summer. But so far it's always been about the AI opportunity. There really hasn't been a lot of coverage around the risks and the regulatory sort of exposure or the conversation around it and what to look for.
Yep.
Whether it's at the MBA, I think the MBA is an AI conference as well, right? I think they did their first one last year in San Francisco.
They had like breakout sessions on it. I don't think MBA has a dedicated AI conference, but
that may not be a bad partnership with Housing Wire, or something, to be able to sort of put you guys, especially since you guys are dealing with this from a regulatory standpoint, from a state by state legislative affairs standpoint, to kind of lead a panel or a session on this.
Well, talk to Clayton, talk to Sarah Wheeler, get us in. Bob and I are always willing to share our knowledge. And, Rick, I'll do a personal plug for a sec. At ICE Experience this year, we are dropping the first of its kind, a compliance guardrail managed AI LLM through Big Point of Sale. So we're releasing it and launching it at ICE Experience, and we'll have it to be demoed. That is literally a LLM that is all about compliance guardrails and compliance policy and procedures, and it comes with a full compliance stack. So we're excited to go and show it to the industry, because we're really looking at this guardrail management system as the key component here when you use AI. That's
great. Well, no, I know ICE is in a couple of weeks. I know that I have the New England Mortgage Conference is in the next couple of days down in Connecticut. I'm speaking at the New Jersey Mortgage Banking Conference here in.
See you both there.
Yeah, good. And then what are the dates of the New Jersey one, Matt?
22nd.
Oh, there you go.
Yeah,
you guys are going to be there. Yeah, it's Sunday the 22nd to the 24th.
Yeah. And then that's immediately following the ICE conference
yes.
in Las Vegas. So
I'm gonna have a busy month. I got Lenders one, then I go to ICE in Vegas, then I come back to Atlantic City.
Yeah, well, we'll see you in Lenders one. My it's funny, my son is getting married in Tucson, Arizona, and I'm actually flying that Sunday to Atlantic City for your conference at the conclusion after he's getting married on Saturday. And I told my kids on Sunday,
it's not my conference. I'm I'm the lonely conference planning chair. I'm not president of New Jersey MBA.
Oh, I didn't mean that was a Freudian slip. I didn't mean to say that. But the conference that we're both attending in New Jersey, in Atlantic City. Well, that's good.
I look at it as yours. You reached out to me, Matt, to see if I would be willing to be there, which of course I am. Look forward to.
Yeah,
I think me and MBA of New Jersey's DNA is closely tied at this point, and no matter what my role is, I'm no longer a board member. I'm just a past president now, but I will always dedicate time to that association and make sure it's always strong. So
yeah. Well, good. I appreciate you being on the show, Matt. Bob, thanks for your leadership as always in getting this podcast up and running. And this will be. I'm going to go ahead and schedule this and get things rolling both on LinkedIn and Facebook and on Yahoo YouTube. So
yep. Let me get one quick plug in. And I know we talked about at the beginning whether it made the recording or not. The National Advocacy Conference for MBA is coming up. Quickly followed by NAMS. They have their advocacy conference the week following.
And that's April 11, 12, 13 or 12, 13, 14?
MBA is the 14th and 15th in DC, and then it's the Tuesday following is NAMS. Whether it can be, you need to be in DC, you need to talk to your legislators. Whether you're a broker, a banker, a bank, whatever, speak up, let them know. The people that you elect generally don't know there's a T in mortgage. It's up to you to help them understand how important we are to the families in their districts and how we build communities.
Agreed. Well, I'll be there with my colonial outfit on
Same.
for the and do I bring a musket, or is that not allowed?
No musket. No. Let's not go there.
Good. Thanks, Matt. I appreciate you being on the show, and
Thanks,
we'll
Rick.
see you
Yes,
guys at the
thanks, Matt.
conferences.